Let me wait on it. Let me wait on it. Let me wait on it. Yeah, sweeter baby. In a rush, baby. So much better when we're on the same page. So let's take it off. But when it's the right time, then that's for a lifetime. This is not going this way. I wanna figure you out before I leave. This is not a trade that I took. This is a trade that I wanted to see. Like, I want to see where the price is going. So that's why I was like, you know what? I was gonna put this like this. Because obviously, if you go to a higher time frame, let me introduce this guy. When I be next to you, I'll be on your body like a tattoo. Cause gotta be us wait on. Oh, I love this song, man. Anyways, you guys can see over here. Man, Vito, shut up. I was kidding. But over here, you can see that we're going lower, right? We're going lower, 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 lower. And there's a lot of resting liquidity in this area, especially like towards here. If you look at like the overall structure, look, we're going like even though it looks like it's consolidative. Let's zoom in a little bit. You can see it's bullish overall. Okay, so this is just a minor pullback in the bigger picture. So now we're pulling back towards like here, right? So I can assume safely and they're pulling back towards here. Just play something else. There we go. So, right. Okay. So over here, as you guys can see, if I pull back here, I pull back towards like this range right here, this auto block. Okay. Let me just. Fuck in a car. So if I go to the weekly, for example, you see how like this is pulling back towards like this area, not this area, right here. See, this auto block has not been claimed before. But if you look at this one has been claimed before. So this one has not been claimed before. So this is weekly, okay? So on the weekly time frame, we're bearish, right? Obviously. But then it's okay. So because we're bearish for this week, and we're pulling back towards here, okay? This is like the point of interest, okay? 15-minute. See, now we're here. 1 minute. We see a market structure shift. See, market structure shift. And now this is gonna be a protector high. But ideally, I wouldn't use this as my stop loss. I would probably use this one. I would use the wick, the candles from here. This is just a wick, right? So I'm just gonna use like candle over here. And now we can take it lower, right? See? So I'm taking it to like the closest draw on liquidity, where you can feel like low key, like if you zoom out. So the best thing you can do here is you can refine it to here, and then you can refine it to like the closest draw on liquidity. For example, I could just put this here, 4.3, 4.3 right here. So as you guys can see, you can refine it up to like here. So it's like what, 4.6. Easy. Okay, 4.6 out of this trade. Because why? If you entry after this market structure shift, you can target this strong high as your stop loss, and boom, sell off. Just like that over here. Get rid of this because now it's not bullish anymore. We've shifted back towards where we were supposed to go. Again, if I look at it like this, watch this. This is just a pullback. This is just a pullback to this to go lower. Okay, simple as that. Just a pullback. Okay, if I show you guys this, if you look at this, pullback, impulse, right? And if I go towards this, alright, whatever. Next one. Alright, so if I go towards this, as you can see, if I go to 15 minute, we're here. See? Right here, parallel. Okay, we balance this. And then now we're going lower. We're going here, but the best place to TP is here. Like right before this auto block. Just like inverse theory of what you do here. Right here. This is where you entry. You look for the market structure shift, and then your entry towards what? Here. I say like that, baby. If you take a look at this, London took out Asia's highs, right? So this is going to distribute lower, right? This took out the highs, and why it's going to take out the lows? Watch. I mean, go lower. Okay. So you see the market structure shift, pull back, strong high, go, right? Auto block right here, rejection of price, go. Okay. So you see this? This is the, if I refine this, 4.6. Now let's look at GPP USD. See, if there's no, okay, I'll show you guys something. See, this, watch this, okay? Until we see a market structure shift, let me reduce this a bit. Until you see a market structure shift, you don't take it. See? So for example, I saw a market structure shift somewhere. Oh yeah, so over here, right? So if I look at the overall narrative, right? This is the order block. But then over here, right? So obviously like this is the area which it taps into, right? This is still bullish. This one, this candle, okay? If I highlight this one, if I highlight that specific candle, where is it? Okay, so it's like over here, okay? See? So the real market structure shift happens right here. See? See the change of character? See? So even though this is not really a market structure shift, okay? Because it was supposed to break like this low in order to be a market structure shift. So you see this market structure shift? Boom! We have it just like that. So now this becomes strong high, okay? This becomes strong high. Now you can target this high. And you can target the market structure shift on the 1 minute whenever market structure shift happens. Assume it's here. And then you take it towards the OTP. Just like that. Just like that. See? So this is where you would entry. See? Right here. Only problem with that is that the fact that the risk to reward is pretty low. I would put this like at the wicks, at the bodies. I don't really need to put it all the way at the wicks. By the way, you put it here. Because it's going towards here, right? Overall. So, yeah, it should be fine. Because it's overall, like, if you look at it, this is just a temporary, it's like very similar to what what's happening on... Bro. What the fuck was that? Anyways. You can see that this has been refined further. What is it doing? Impulsive, corrective. Sorry, corrective, impulsive, corrective, impulsive. So this is what? Auto block. Boom. I love this song. Okay. 15 minute. This is the auto block right here. See? Ejecting prices. So this is a good spot to even entry. You know why? Once you see this market structure shift, it's very similar to what's happening on Euro USD. Look. And then once you can enter entry right here. Strong high, right? Strong high. No. See? All this is resting liquidity now, right? You can take it further. You can like take it like over, let's say over, not here, right here, right here. But I would go for a 1 to 5, 1 to 3, okay? See, right here, okay? Parallel to this, right here. Oh no, never mind. This was already used. No, don't use that. Yeah, I would say like stick to here for now, because this has not been used whatsoever. I would say like at the body, see? But the risk to reward is pretty low though, that's the thing. Because the candles are so fucking huge. And the market structure shift happens here, so... That's the problem. Auto block. Once again, this is the same thing. I explained this. Let's see gold. So you see over here, after the market structure shift, see over here, that's where I entry. 2.67, full TP. See? It's okay, let it play. Even if it pulls back, it's going to, like, even considering, okay, considering this, even if it uses this, it's going to pull back here, right? Here, and then go. Because this is your stop loss right here. From the 1 minute market structure shift, strong low. Come here, maybe towards like this area right here, this area somewhere, and then go, right? Yeah, you can just use this. That's fine. Should be alright. Yep. Stay play. Yeah, 2.6. Let's see, Nasdaq. NQ is consolidating for too long. But it's just a pullback. See? It's pulling back towards here. See? It's using this as support, which means it's pulling back towards here. Right? So it's basically impulsive, corrective, impulsive. So now we're on the impulsive wave. And it's proof over here, as you guys can see. This is using this as support. We're taking this towards this. M15. So this is the auto block, but once we see the market structure shift, if we see a market structure shift, this is not really convincing price action, so I wouldn't entry on this. Yeah, I wouldn't entry on this. It's not really convincing price action. Look at this. Too much consolidations. And overall, if you look at it, it's like consolidating for too long. So yeah, I wouldn't entry on this. I would not entry on this. The thing is, okay, one more thing. When you're dealing with a range, just do OTE on this. You see? Premium right here. It's 0.6, 608, golden. So it's rejecting price from here, right? Which means it's probably going to pull back. So if it's pulling back, then do not entry. Again, I haven't entered on any of these. You want to entry after you see the market structure shift. But here, see? It's not convincing price action. It's probably because it's Friday, because it's, I mean, it makes sense, right? So this is the high. So if it shifts this, that's when I would entry. You know, I wouldn't even think of entering until then. I wouldn't think of entering. Yep. It's a 2.8 trade, but if there's no market structure shift, I'm not entering. Okay, simple as that. What's going on here? I think if I look at the, yeah, there we go. Cool. Where the fuck is, what the fuck my wrist, what the fuck my blood, what the fuck my kid? Okay, you see this? And then you see this strong high. But the thing is, once you see the market structure shift, if you use the strong high from the market structure shift, that works too. Because like, if you think about it, you gotta like refine it as well, right? Okay, I'm tweaking. We're just going bullish, never mind. I'm actually tweaking. Yeah, the market structure shift was down here. Sorry, my bad. I'm tweaking, see? This was the entry point right here, market structure shift, 1 minute. Put the strong low, this stop loss at the strong low. Look at that. Lickety. A lot of bullish pressure, see? A lot of bullish pressure. See? NY, basically, London took out the highs. So NY is distributing. Sorry, wait, what? Yeah, London took out the highs. So NY is supposed to distribute, but right after it balances this though. But the only problem with these trades is the fact that these are at extreme highs. Look at this. It's an extreme high. So I think, ideally, I would get out right now, right? I would get out right now. Like I would call it here, and I would get out. But that's like a 1.9. Yeah, I would probably get out right here. 1 to 1.9. I wouldn't take this trade in the first place if it was just a 1.9, because it's rejecting price from here, right? So it's obviously like reacting, and we're considering that we're like extreme premium. Look at this. Like there's no other rest in liquidity to the left. See, we're at an extreme premium, right? So I would get out right now, because the last thing that I want to be doing at this point is probably be long in the market, because I've already like came to an extreme. Look, you come here, see, 1.9. See, so you see this market structure shift. You take it from here. This is an extreme premium, so I wouldn't take this. Okay, cool. Yeah, so that's why I would get out right then and there. So full TP in that case. So in this case, you see that, you refine it further. That, right? You see the reaction on the 1 minute. Market structure shift. I would consider this, see? Market structure shift. Right there is where you entry, right? This is where you entry, sorry. I won't take this trade today because I don't want to like, today's Friday, so it's like super volatile. But in general, let's just do this as like a study, I guess. See, this is the strong high, and you target the closest order block. The low key, you could even target here because we're flowing towards that direction, right? But ideally, would I target that? I mean, sure, yeah, why not? Yeah, target this. 1 to 5 at most. Don't go for anything more than a 5. Anything more than a 5 flips on your head. Trust me. Okay? Do not go for anything more than a 5. But ideally, I would stick to my normal risk to reward plan and go for 1 to 3. 1 to 3 is like what I want from every trade. So if I can get a 1 to 3 on a consistent basis, that's better than like having random risk to reward ratios, because that's consistent growth, not like gamble growth, you know? Gamble growth is like what I call when I'm using random risk to rewards and I don't really have a plan to like what I'm doing. So that's when I call it gamble growth. See, you exit out of here, and you're pretty much done for the day. You exit at the body. See, it's a little doji candle here, but you exit right there. Simple, easy, right? Euro USD seems like it's having a shot. Okay, yeah. See, this is the shot towards this order block. So 1 to 5. The only problem with this is like the wick is super high. So ideally, even if I wanted to, let's say even if I wanted to refine this trade further and be a little more safe, I would put this here, right? But that gives me like such shit risk to reward. So ideally, I would go here. But this is more riskier, but that is more safer. This is risky, that's more safer. So ideally, I would say I would go for like one of these trades. Once you see this shift in structure, you take it like right here. Like once it shifts structure, like over here, boom, pulls back towards this, goes. So even if it pulls back, it's gonna go here and then go. Okay, cool. 1 minute is pretty scary, so you don't want to like base your like trades off 1 minute either. But yeah, so that's pretty much what you want to do. And I won't trade today because the risk to reward here is not that worth it. Keep in mind, if the risk to reward is like, again, I don't know what you guys' trading plans are, but I would say like if the trade is not giving you at least like a 1 to 2.2, don't trade it, because it's not worth taking a trade that's like, you know, giving you like shit risk to reward. Like, what's the point of taking a trade that will like barely give you anything? Like, what's the point, you know? It doesn't make sense. Exactly. So I would say like don't trade anything that's like less than minimum. I would say 1 to 2.2, because 2.2 is like the and 2.2 is like the minimum. You gotta go for like at least 2.2. You see this market structure shift? Put your stop loss here. Boom. See? Sold off. Alignment. Yes, sir. Okay, so yeah, I'm pretty much taking this towards this auto block right here. That's where I'm gonna TP. It's okay, let it pull back. It's not the end of the world. See this gap over here? So this is a auto block in itself. So this is an auto block. See? Refine it further. Take it lower. Gold. Gold has it full TP. See, it's gonna reject price from here. Watch. Why? I would usually, like, if there was higher draws on liquidity, like let's say for example there was like some other highs on the left side, like let's say that there was like some high here, like above this, then yes, I would take it full TP. So if there's no highs to really prove that, because we see this is like the super high, right? So this is like the high from before. This is on the 26th of September. This is where we are. So you see what I'm saying? Like, this is an extreme high. So I don't want to like, you know, like if there's an order block here, there's a high likelihood it's going to reject. That's why I would say like, you know, see, it's rejecting price right here. So that's why I would TP right at the body of this order block, see? So yeah, that's little things that you should know. Especially if like, let's say for example, there's no draws on liquidity above, like there's no resistance liquidity above, then don't take it further than what it needs to go, because it's probably a trap, you know? Most likely it's going to be a trap, so just be aware. Things to be aware of. Because if there's no resistance liquidity, there's no reason to be going higher. It's just to like sort of trap other people who are trying to like take decisions early. Like for example, look at this, right? If you go for this kind of trade, like let's say you see the market structure shift, right? You would assume price is gonna like shift in structure, right? See? You would assume price is gonna shift in structure. And it does, it gives you that. But then what does it do after? It pulls all the way here, see? That's what I'm saying. Like there are certain like things like that, see? Because like here's the thing, right? Like most people, what they do is they assume, right? They assume, like let's say over here, when there's like, this is the high, right? So once they see like this being like a run on liquidity, they would be like, hey, I gotta like short this as soon as I see like a, you know, some sort of reaction. But then what happens? They get stomped on. Even with that market structure shift, like it happened over here, okay? Even with that market structure shift, what happens? They get stomped on. Why? Because we're still bullish. We didn't really like change structure. You know what I mean? See? Like even though we have this, right? Technically, like even though we did this was an inducement. See? We're still bullish. You know what I mean? So that's what I'm saying. Like, especially with things like gold. Gold is always like making higher highs. So over here, for example, like now in this scenario, we know for a fact that there's like lows below, right? But in that scenario, we have no idea where price is going. See? So once you see this shift in structure, you can just take this, you know, onto, what's the ratio here? This 1 to 4.8. See? There's a lot of like selling from this range right here. So pretty much, you can take this trade, 100%. It's just up to like how you approach the markets, I would say. Because in most cases, you don't need to know too much. You just need to know enough to like execute the trade, you know? You just need to know enough to like execute the trade. That's all you need to know. See? Right here. On the 1 minute, market structure shift. Boom. You see this pullback towards here? What are we? Selling off. So yeah, you just need to know like the overall narrative of what's happening. See? Because like on the 4 hour, we know for a fact that we have lows. We have unbalanced lows. So even if we are in that type of context, like even in this scenario, right? Like obviously like you would expect price to even like pull back from here. Well, we didn't see a change of character, which means we're still bearish. So if there was a change of character, like say for example, like this was broken or something, then yes, that's fine. Because that's a change of character. But this, it's still selling off. See? On the 4 hour. This is on the 4 hour, by the way. Selling off. So that's why I would take this trade on hindsight. This is a live trade, by the way. Oops. See? Rejection. It's rejecting this price level. See? Auto block, rejecting price. So again, if you guys want to like come back to this, it's on the 18th of October, 2024. 18th of October, yeah. 18th of October 2024. Taking it towards here. Okay? Because this is like the nearest buy side liquidity draw. But I don't want to like full TP, I just want to TP like where the auto block is. Even though there's an auto block here, I know for a fact that it's gonna like go lower. Because there's a bit of a space here, right? So I wouldn't say like this was used. See? There's still like some space here, so this wasn't really used. Nope. So that's why I would like TP right below that, you know, right at the wick. I could refine it further to like the body. So to like here. But that would be riskier, but it would be like more RR. It's not really worth because I'm just gonna stick to 105. Because if you zoom in, you can see that there's this one, see? Right here. So I would like refine it to right to this wick. To the body of the wick, see? Right here. Okay. Now if I zoom out, you can see that this is, yep, just like that, 5.28. So you can just do a 1 to 5. You can still make more money, you know what I mean? Yes, sir. So you can see the displacement's dead. So even if they try to like show something else, it's pretty much displacement's dead. So it's okay. Take this trade, man. You know what I'm saying, shit? I wouldn't take it today though. I don't wanna die. You can low-key take it even towards like here. Like even this one. Okay, let's do the same thing on here because it's like very similar, right? So I'll do the same thing here because this is not like a real trade rate. 1 to 3. Because I'm targeting this high. Because I'm targeting this high, shit. Let's see. It's gonna pull back, watch. So now that it like almost tapped here, it's gonna like, once it taps here, it's gonna probably like pull back and then go. This is an auto block over here as well. See? Because even if it does have like an inducement round, you're still pretty much good to go. Because if we pull back here, and then we go. See? It's gonna sell off, watch. Cool. GG's, brother. Okay. Good. It seems like it's making higher highs. But I wouldn't take it like further though. Like full TP in this is like a very, like something that I wouldn't do. See, because like, you know. What is this? What's going on here? I wouldn't take this. See, the market structure shift is over here. Even that, it's not convincing. Look, it's wicks. It's fucking wicks, dude. Look. Just a wick. It's a bunch of wicks. See? More wicks over here. Is this an MSS? Or is this just it's not an MSS, I won't say so. Overall, Friday is not the best day to be trading, but see, even in this scenario, there's not really a market structure shift. See? It's not even close. It's not even a market structure shift at all. See? It stops there. Even if it does displace, okay. I wouldn't still count on this until like the candle is made. Okay, there we go. Now you can trust on it. But still, like the risk to reward is like pretty shit at that point. See, you're almost here. Look at that little space in between. Plus you have this like reaction over here. See? You see the sell off. Sell off. Sell off, and then you see that from here, market structure shift, and then you take it. Either way, it's not really worth taking this trade. Yeah, see, it's a rejection. It's not really a market structure shift. See, this was a market structure shift. See, so now it's going for inducement. Now I'm pretty sure it's like, even though this is bullish, right? This is a market structure shift. But in this case, I wouldn't trade this in the first place because it's very inconsistent price action. So it's rejecting, but it took out these highs, so it's a smart money trap. See, this was a market structure shift right here. It took out these highs, which means the stop loss was taken out. If you like put this as your stop loss. So I think on gold, if you stick to like a 15-minute stop loss, that would be better. See? So this is like the M15. If I zoom in. See this over here? Market structure shift. Pull back. Boom. Pull back. Watch. Boom. Just like that. Injection. Boom. Okay, let's let it play out. Okay, I'll update you guys on both of these trades, GBP USD and Euro USD. I won't trade gold. It was a W. Look at this. It was towards like the body, the bottom part of the body over here. So yeah, W trade on gold. NQ consolidating. I won't trade this. The market structure shift is dog shit. Look at this. This is horrible. It's like almost it's like pretty much full TP by that point. And I wouldn't trade stocks today. I think it's basically it's Friday, right? So I wouldn't really trade today in general. Look at that market structure shift. This is good. This is good. See, it's consolidating for a while, but we still see a lot more like bearish pressure than bullish pressure because it's trying to balance this level and go